Ladies and gentlemen, welcome to the Midday Market Monitor. In today's video, the stocks are looking, for the most part, there's a lot of green names, but overall, the NASDAQ and the S&P 500 are just slightly, ever so red right now. S&P 500 down 0.24%, NASDAQ down 0.1%. Let me look a little bit closer, actually, that might show a little bit better of a representation of today. There we go. But there is some exciting things. Obviously, VCX, which is the fund that holds a lot of Anthropic, is going up. There's been a lot of talk about a recent update on earnings projections, revenue projections, token profitability, and of course, an upcoming IPO. That upcoming IPO is looking to be quite large. Potentially even larger than SpaceX, which will be another brand new, largest IPO ever in history. And I actually think that this one is going to see more user engagement, maybe not as much retail engagement, but overall new funds, more money being put into this name because there is a level of growth that was not seen at SpaceX. SpaceX, obviously, I think, very exciting name. A one of one, maybe a massive moat there. Anthropic, some of those moat conversations talk about, earnings reliability, definitely in question, but they are putting up that growth and showing that, 10x amount of overall growth for the last almost 5 years now. So that is quite exciting. Double digit man. How's it going, guys? I haven't checked the draft, so I guess we're still above 10%. No, we're not. I'm not double digit man anymore. Steve's got it wrong. We're up 9.5%. And by the way, that's being led by Rubrik and Palantir. But Microsoft, SMCI, those have fallen below those 30+% gains, as some of these names are seeing a little bit of red today. Microsoft down 3.2% and falling quickly, actually. Same thing with Meta. Meta's down 3.9% today. Find this to be pretty incredible, the overall sell-off in some of the most highly profitable and, fast-growing names in the entire S&P 500. Microsoft ended up saying that they are going to keep free cash flow throughout the entire year of 2026. That obviously got investors' hopes up a lot, and we still are up from that moment. Even being at around $480 is a big relief to a lot of Microsoft investors who are buying in the $300 range, right? So that obviously looks really good here, but the sell-off today is quite strong. Where we're not seeing a sell-off and obviously benefiting my actual portfolio more than benefiting the draft is NVIDIA, up another 0.85%. This was on a couple different pieces of news. One was, I believe, a lower commitment to OpenAI's Ohio facility, which was a $500 billion build-out. NVIDIA is now guaranteeing about $105 billion of that. They're giving some additional money to other parts of the chain, like SoftBank's energy play as well. So they're investing in that company. I think, $3 billion in SB Energy. And that's going to be to help out the development of the massive Ohio data center. Jensen Huang also came out to also say that if OpenAI can't pay their lease, one of the amazing things about compute is how fungible it truly is. That they're not building out a facility the way that the way that I thought about it in my head. It's like Michael Jordan's old mansion was up for sale forever. But, the gates say MJ on it and big 23 in the middle of the lobby. And it's very specialized to him, where I look at the data centers, especially NVIDIA's hardware, not, TPUs or these sort of things that might be a little bit more specialized to Gemini. But the NVIDIA data centers are very, very fungible. And meaning that if OpenAI doesn't want it and Anthropic's willing to pay that lease or potentially even higher if market rates continue to climb, which they are, and we'll talk about that here in a second, that they could probably find additional buyers or have a cloud service provider come in and then spread that across thousands of potential buyers. The same way that AWS might also need 10 more gigawatts, or a mixture of AWS and Google Cloud and Azure. The interesting part about compute is that flexibility, that investability allows for you to make such bets like this 10 gigawatt Ohio data center that obviously right now it's going towards one customer, but worst comes to worst, there's likely a buyer if that doesn't end up, happening, right? Tanner, I said you looked all of 5.6, but you lied. Credible sources say that you're 411. I mean, come on now. Come on. Yeah, so let's get into SoFi really quick, just because I'm seeing some immediate comments. There have been a lot of LinkedIn posts recently of people who are leaving their, well, not leaving. They don't want to leave, but they are getting laid off. So the insider, SoFi Insider, ended up finding a few of these LinkedIn posts, 3 of them so far, that ended up talking about, being invited into HR on Friday morning, which isn't typical, being laid off, and that this is happening in a couple of different departments. Not quite great. But this is not the first time that we've ended up seeing this. Well, SoFi has continued to put up unbelievable growth. So I feel like they did this at a similar point in the year last year. It's probably around August as well, if my memory serves me. And I think that they have these sort of trim the fat moments of, hey, is everyone hitting their marks? Is there potentially overinvestment into certain teams that maybe don't need the extra the extra work? So I think what's more important is that companies get overly bloated. Cash App did this. They way overhired, didn't take care of it, definitely didn't want to make the harsh moves to do big layoffs. And then what ends up coming out are these massive stories where they're laying off, 40% of their workforce. SoFi's not having to do that. They're doing small little cuts, maybe every year, maybe every 6 months, whatever. And I honestly think that that's just very healthy. That's what a corporation needs to do. Salesforce ended up doing this, which I think caught a lot of, attention maybe 2 years ago or so, where Mark Benioff said, here's our earnings call. We just posted the greatest numbers and the greatest margins that we've ever posted. And alongside that, we're also laying some people off. It's not because, they aren't great workers or something like this, but we are trying to stay as lean and as fast as possible. And that's what you're going to see across, I think, a lot of really big companies, is that small teams can move very fast, especially with the advent of artificial intelligence. And that doesn't mean that they're not going to hire for new things. SoFi is now probably has more teams than ever, more employees than ever. But along with that, you have to make sure that you're not over-investing in certain areas that aren't seeing the return that maybe, individual team leads or something like that initially thought. So that's happening. But one of the other stories from SoFi, which I actually thought was even more interesting, was Piper Sandler initiating a SoFi overweight position with a $22 price target. Now, this is exciting. Obviously, people ended up seeing a price target that's higher than the price today. That was fun, but people wanted to see those $30 and $40 price targets. The part of the story that no one is talking about for some reason is actually going through and looking at the model. So let me ask a question to you guys. A lot of SoFi investors in the chat, they ended up showing off what's called their midterm outlook. Okay, so this is about 3 years out. They ended up showing off their revenue growth and net income growth, or EPS growth. Okay, can you guys tell me in chat what those growth rates are for both revenue over the next 3 years, what they're guiding for, and have continued to reiterate, and then also net income? I'll wait here. They're pretty rounded numbers, so shouldn't be too hard. But let me know if anyone knows that off the top of their head. Do you think Meta is cooked? Not at all. Not at all. Meta was doing great. Dark Side Cookies, first person to answer. Perfect. Right on the dot. You didn't have to guess. Well, I mean, you did guess, but you your memory serves you correctly. They said 30% revenue CAGR, and then they said 40% EPS growth. They said 38 to 42%. So, put it in the middle, 40%. That means that revenue is coming up, but also margins are going to continue to climb up alongside that. I'm going to try to remain super level-headed, okay? They said revenue growth of 30%, and if EPS grows faster than that, that implies margin expansion. That's what that is. Incremental margins that we've seen have always been consistently above almost 40%. So if you assume that incremental margins are constantly above 40%, then the area that you're heading towards is going to be closer to what your new revenue is coming in at, and the old revenue is going to make up for a smaller and smaller portion of the overall, revenue mix. So the reason why I bring this up and the reason why it's so important is that the $22 price target is unbelievably sandbagged, as Shay ended up highlighting here. Well, he didn't talk about how it's sandbagged, but he put up the numbers. The firm is modeling a 22% revenue CAGR and a 27% adjusted EBITDA CAGR through 2028. What? Okay, so they're expecting 8% lower growth every year than what SoFi is modeling out to be. And by the way, SoFi is a serial sandbagger. On top of that, last quarter, we ended up seeing 30% EBITDA margins. The quarter before that, we saw 31% EBITDA margins. Okay, so they're expecting adjusted. They don't talk about EPS margins here, or at least Shay does not highlight that. But that margins are going to fall and growth is going to fall off a cliff. We're going from 41% down to 22%. Way below what SoFi has ended up predicting. SoFi expects margin expansion and revenue to consistently put above 30%. And that's what they put a $22 price target on. So whenever people talk about, the $22 price target not being high enough, I agree with you. But this is not even, they're not even looking at SoFi the way SoFi is telling you that they are going to accomplish. They don't have the insider data. They don't have the knowledge that SoFi has. They don't have the projections. They don't have what they're going to spend on different areas and the different total addressable markets that they believe that they can tackle. And yet they are putting it way below what SoFi ended up saying it was going to be. So, that's cool. I appreciate the overweight. I appreciate the buy, the buy rating. I'll never hate on a analyst for not giving us anything other than a strong buy, which is what this is. But the firm is modeling a terrible projection of SoFi's growth. And this is not based on my projections. This is based on SoFi's own projections, which have been historically under where we've ended up putting up our growth, right? We have to continuously remind ourselves that SoFi has constantly beat their expectations. They just reiterated those numbers, 30% and 40% last quarter. And I'm pretty sure he even reiterated it on our podcast, which was like 2 weeks ago. Maybe it was 3 weeks ago, something like that. So if you are to, also look at SoFi, I think you have to be pretty happy with the price that is under where Piper Sandler says it's to be today. And also, if you have an expectation that growth is going to be even higher, you got to be in a pretty happy position right now. That's what we're looking for. That's a pretty good area to be in. Like that literally is what like alpha for the most part is like if a certain company says that you're going to see a certain amount of growth, you believe that it's going to be much higher based on different data that you're seeing. And my data is the exact same data that everyone else has, which is SoFi's own words, and considering that they've beaten raised every single quarter, aside from the last quarter, they didn't raise guidance. But they've never not missed revenue, and they didn't need to raise guidance because guidance is already extremely strong. So yeah, that works. Okay. NVIDIA seeing some red candles here going from up 0.8% to 0.5%. Nothing to worry about too much here. Still green on the day. But seeing some red candles right now. Let's see if there's a reason for that. US 30-year yield just hit 2007 highs. 30-year Treasury yield just climbed to 5.3%, its highest since 2007. Yeah. Which can definitely be concerning for SoFi as well. I mean, obviously, they're a lender, U.S. lender. Um, that can definitely impact a company like SoFi. But I also have some things that I want to talk about in terms of the ultimate bull run that we might end up having. There was a couple cool comments that one investor had about some of the statistics that we're seeing for revenue growth through the S&P 500, all-time low valuations. Well, not all-time low, but extremely low valuations for companies that are putting up, very high growth, high margin expansion during this sort of AI craze. And because there's a big swath of investors that don't really believe in that, we're actually potentially set up for a decent bull run. Now, we already are in one. I mean, we're almost at all-time highs. If today wasn't just slightly red, we're looking at 7,800 on the S&P 500 practically, from yesterday. So even this morning, that's a pretty good place to be right now. Yeah, the VIX is quietly creeping up as well. There's been some people anticipating some more volatility, and we are seeing that here. Lumentum is up 6.8%, almost getting back to $1,000 a share today, $999 on the highest part of the intraday trading today, $999. Very, very exciting there. Cerebras up 17.5%. Let's see what else. Figure, this is one of Roy's companies, up 10% today. They ended up showing off very exciting earnings. Coherent up 10%. They also showed off earnings last week. Still seeing some appreciation in those stocks. Are we near all-time highs? 440 or something? Yeah, but a good correction back. Obviously, we're in this really, really long uptrend on companies like Coherent and Lumentum, many of the other Celestica and AOI and all of these photonics or networking names that have done very well. But after the recent sell-off, I think some of that trade had lost a lot of momentum. Maybe it's coming back now. Who knows? Same thing with SanDisk. A lot of these really high beta, high risk companies that ended up selling off are seeing some appreciation. That's very nice. DRAM's up 6.8%. So there was a report. Let me see if I can find this here. I don't remember where I put it. B of A, I think, was who it was. They created this Frontier AI tracker. Okay. They ended up looking across a lot of the frontier names, open source names, seeing is there more spend that's happening with artificial intelligence? How are token prices doing? How is all this stuff doing? And for the most part, what we ended up seeing was continuous growth on AI names. A lot of that still is going to Anthropic. The biggest models that people are using and ranking at the highest in these intelligence rankings were Claude Opus 5 and then Claude Fable 5 as well, followed by OpenAI's GPT 5.6. Okay. Although DeepSeek ended up seeing a large amount of usage in Vercel, Anthropic still accounted for the most amount of spend, 65% of spend, which is wild. People are willing to spend for, potentially better tokens. Now, AI token prices are falling. That was attributed to two things: open source, obviously, and then OpenAI having some lower costs across Terra, Luna, some of the other. They're not open source, but I think just a little bit more price efficient models that they ended up pushing out. So AI token prices are down 9% month over month. Rental prices on the B200 GPUs fell by 2%, while DRAM prices rose by 8%. 8% month over month. So if you thought the Micron margins and their overall sales are being impacted already, we haven't quite seen that yet. All right. Let's see what's going on with the NASDAQ right now. Is it's continuing its fall. We started the stream at down 0.1. Now we're at down 0.2%. I'm not seeing anything that's popped up on my watch list just yet. But Andreessen Horowitz got probed by the DOJ on board conflicts. Okay. Let's see what else. Iran seized a UAE-owned tanker in the Strait of Hormuz. Oh, gosh. These conflicts that just continue to happen are driving me crazy right now. Oh, well. How long are you planning to invest for? My whole life. I literally think that this is like, at least the way that I look at it from my angle, it's like, this is the biggest, played game in the world. Get really good at it. I used to, whenever I was much younger, I cared about getting good at like Counter-Strike or something like this. It's like, well, now I can focus on a game that's going to, impact my life much more. Still extremely fun, and I'll probably be playing for a much longer time. I don't have to worry about the servers going down. So, yeah, I mean, I'm going to be investing for the rest of my life. You played CS? I don't play it now. I used to. Okay. Account statement is your high score? I mean, exactly. Yeah. This isn't a game, it's a casino. That's a building full of games. But yeah. So we ended up having the meetup, by the way, over the weekend. The Toronto meetup was really, really fun. Let me show you guys, for anyone that was potentially looking to come or what ended up happening. It was amazing. We also opened up for people to share some photos online, so you guys can go ahead and see those. I just saw that Zach updated his the photos here, but let's see if there's any that are really worth looking at. First up, I tweeted about it. So these were like some of the, I don't know. We didn't have like an actual like photographer there. That was the only thing that I really messed up. The group photo that we ended up taking. Here, let me make that a little bit bigger. The group photo that we ended up taking came out a little bit blurrier than I wanted it to, but still was an absolutely great meetup. There was a lot of people back here. I think we ended up seeing about 82 people, something like that. 82, 83 people that we ended up handing out wristbands to. And it was a phenomenal time. You can see some Steve Love there, the milkman, the goat. But yeah, so next time I'm probably only going to be doing this in Toronto for now. I mean, maybe things change. What I told Tevis is I want to try to double this every year. So next year, we're going to open it up to probably 200 people. The year after that, about 400 people. And yeah, it was a really good time. So I'm right here. I don't know. It's a little bit blurry, but I don't know if there's a zoom between that and this. So I was right here. That's Marshall right there. This is my boy Marshall. So he just joined the team. Tevis behind him. Zach. A lot of great people. So Grace and Sue and Vasu and Mark here and Andrew. And there was an amazing group of people. That's Blake Anderson in the back there. Max, Greg, Clarence up there. Pedro. A lot of great people here. So really do appreciate you guys coming out. It was unbelievable. People flew in from Virginia, from South Dakota, from California. Really phenomenal group of investors. You should have waited me for the pick. Kelly, we took it at 7. I was waiting for you. You came late. We took it at 7. There were people starting to leave, so I was like, okay, I want to make sure I take the photo. Okay. Bro, I walked in at 7:10. Well, you missed it. You told me you were going to come for 6. Okay. Um, oh, I'm a photographer and pretty dang good. If you ask me, I do events also. Charles, don't say this now. Um, Tanner's 5'8.5". I won't have this slander. I was it was actually so funny. Like everyone was like, "Oh, you are like I thought you were much shorter." Tevis, I think, is 6'1", so I do look short beside him. But it was great. That was really, really fun. That's Sodak Zach right there. He was awesome. He also gave me like a sleepy time outfit. So I'm ready for bed now. Thank you guys for coming. Seriously, it was amazing. For anyone that did come that went to the event, upload your photos into the Google Meet thing. That way we just have some more photos of the event. It was a ton of fun. Look at Tevis, eh? What an absolute champion. There's me, Marshall, and Zach. Ton of fun. I don't even know who took these photos. Bossy just being funny. Some great dudes. Okay. This guy was like, I mean, I told him next time, I was like, okay, you're gonna do security if I need security. He was huge. I couldn't believe it. Like you see the traps poking through the sweater. I was like, oh my God, bro. Absolute giants. So that was very cool. Some people flew in to be here. That was wild to see. But thank you guys for coming. Do appreciate it. Blake, Sam Can, Andrew, Tevis, Grace, and Sue. No one's smiling in this photo. Okay. Thanks for coming. There you go, Kelly. You're here. Not a great photo of you, but I think we took some selfies where you're smiling a little bit better. I think that was just taken at a bad time, but I did have a drink. I did have one drink. One Crown and Ginger. So you got to see a little tipsy Tanner for the first time. The SoFi sweater. Awesome. So next year, same time, for the most part, it'll be the same time. I'm sure we'll plan it about 6 months before the event actually goes out. I think there was a lot of people on Twitter that really wanted me to post it there as well. So I'll be a little bit better at, getting it out there. The actual event was like the spot was really nice. I think that came out well. Okay. How did you guys look after the drinks? That was good. No one, like, literally there was not a single weird person there. Like this is what I keep finding about. I'm always worried about the events like kind of going weird, or like someone that shows up that maybe, makes people feel uncomfortable. Or it's like it never happens in this community. It's wild. And maybe I'm jinxing myself here, but like I just think if you are in the investment class, like the people who are coming, there was like a brain surgeon there, and people who do a lot of real estate investments and real estate agents. And like these are people with good careers that are not trying to, make a fool of themselves or something. So, yeah, it was really great networking event. Am I allowed to leave Canada? Yes, but it's much easier for me to host, It's a short drive for me. So, um, yeah. Great time. Wish I could have stayed longer. AJ, thanks for coming, man. Okay. Um, do you think Reddit is a solid buy right now? I think any company that ends up NASDAQ continuing to fall right now, by the way. We started up down 0.1%. We're now at down 0.3%. So, oh, still falling. Reddit's an interesting one. I mean, obviously, the growth is really exciting, and I'm a long-term holder, but it is not as exciting as where we were at, 130 or something like this. If you're going to be holding for, well, I didn't even realize it was down 6% today. I was expecting it to be like closer to 180. So, maybe it is approaching another good potential buying opportunity, but no, I'm not buying this name right now. There will be S&P 500 inclusion. I think that there's going to be a lot of growth, but this is one of those names that might be a little bit closer to like having a higher premium because they have that growth. A lot of that, I don't think they'll be going to the valuation that we ended up seeing before, like 282 or something like this 4 quarters ago. The valuation back then was extremely high. I'd love to see S&P 7100 again. Oh, man. You should have deployed your capital a while ago. Tanner should try to have a meetup in Chicago. I don't know. I think if I'm going to have one, it's going to be pretty far away from where I am. Like, if I was to expand out, maybe California or something, because obviously that is a big flight for everyone. But yeah, I don't know. I definitely don't want to do the meetups as frequently as what Amit did. I think that took a lot out of him. Yeah, I'll probably do it once a year, maybe twice a year. Okay. What do you think of app at these prices? I'm focused on owning the user. I think, by next quarter, I might be interested if potentially they end up returning back to a level of growth that they were at previously and that we're not seeing revenue deceleration. But I'm not really focused on these types of advertising names like AppLovin or Zeta or TTD or anything like that. I really love owning the user. What I mean by that is Amazon, Google, Reddit. Did I say Meta already? Meta, Amazon, Google, Reddit, those sort of names. Okay. I'm coming with a shaver next year. Now, all you guys need to be where I'm at. Okay, we all grow a mustache out, and then we do the meetup. I don't have to shave down, to join you guys. You guys come up to this level. This is a level of confidence to have this ugly mustache and still be engaged. That's what you want to try to accomplish in life. That's a level of confidence that will set you free. Don't try to get me to come down to you guys. Shaving and taking care of yourself. That's for losers. Okay. Morgan Stanley ended up putting a bull case outcome on Amazon of $500 a share, 12 months out. They essentially had looked at that $1 trillion revenue estimate that Amazon had put on AWS and said, hey, if they can achieve this, they definitely should be closer to $500 per share than where they are today. But that was their bull case. I think their base case was 345, which is still very exciting for a massive, multi-trillion-dollar name that Amazon is. Not to forget that we're seeing different types of technologies being used, like Uber using Zipline to help deliver packages via drone. Amazon's going to be a big beneficiary of this. Amazon is not AWS, right? It's or exclusively AWS. There's still many different areas of that business that people are quite excited about. And when I think about self-driving, when I think about drone delivery, when I think about a lot of different areas, robotics and stablecoin payments and all of these things that could potentially make their services even better or more margin accretive, it makes me very excited to be a shareholder. So I'm not trimming a dollar out of Amazon. Reddit users slowed down. In the US, it did for sure. But they've had this moment in the past before, and it didn't end up affecting growth over the long period. So I think, NVIDIA's had this problem, or sorry, not NVIDIA. Netflix has had this problem. Meta's had this problem where there's been a quarter where they ended up seeing user growth decline. And then it didn't end up turning out to be anything that was long lasting. I think that Reddit, obviously, you want to monitor if that becomes a constant, like they are losing users. But their financials tell you they're growing at 60, almost 70% a quarter. I don't think that's a declining business. Okay. You buying NVIDIA here if you had the money? No, just because of my concentration in the overall, in that company is over 50%. Nor do I think like 227 is the screaming buy that like 170 was, 180. Remember, we still haven't even seen a quarterly update. It's the same multiple, same financials that we were looking at back whenever this company was like 176 or whatever. So there's a big difference in that entry price. Now, do I am I trimming a dollar of NVIDIA? Am I selling here? Not at all. I'm continuing to hold, but I think that there's other really exciting names. But stocks are going up in general, so I'm not like looking to bite at everything the way I was before, like CoreWeave at $60 and Nebius at what was it, 160, 170. Like those were screaming opportunities, and that's why I have no cash anymore. But it worked out in the end. Now, you know what company I'm looking at? This, like I spent my entire Sunday probably listening to, I don't know, 8 hours of Luca Ferrari of Bending Spoons do interviews. This company is so unbelievably interesting. And I don't like, this is the frustrating part about investing, but also the most exciting part. I can put a lot of work into Bending Spoons. I can look at the company. I can read through the entire S1, which I did. I can go through and to be fair to me, the S1's not that long. You can go through the quarterly reports. You can listen to the earnings call. I say earnings call because they just went public. And you can still not be fully sold on the business. I've not made a decision on what I want to do with Bending Spoons. A lot of people, for the most part, from what I've heard, don't even know about this company. I've never heard of it. The way that I would put it is in the bucket of, many people try to put it in the bucket of private equity. They buy companies that, maybe people have believed to be undervalued. And then, fix up the businesses, trim the fat, and then go and resell it. Bending Spoons does not resell. They've never sold a business in their life. They buy businesses, and then the returns of those businesses, the actual cash flow that they're generating, builds up their balance sheet to go out and acquire a new business. Now, that's not the only way they do it. They take out a lot of debt and have, really, really pivoted their strategy to take out a lot of debt to acquire software companies while they believe are, they're very, very low right now. They just acquired Airtable for $1.25 billion, $2.2 billion after the amount of cash that they had on the books as well. But essentially, they paid for everything that the company's worth for $1.25 billion. that company had a previous round of like $11 billion. These companies have had better days, but you don't see explosive growth in, and I can bring this up. Some of the acquisitions, they've done over 50 acquisitions. Like I said, they've never sold a business ever. So a lot of these are just continuing to pile up, but big names that you guys would know that you probably have stopped using their services, which is quite interesting. Vimeo, Evernote, Remini, WeTransfer, Eventbrite, Meetup, AOL, StreamYard, Brightcove, and literally so many more. So Airtable is going to be one of the biggest ones that they've acquired going on that list. $24 billion market cap. The growth is insane. I think they just grew like 124% year over year. They've been kind of keeping up this 85% CAGR since 2022, 2023. And it's through this strategy of acquiring businesses that they don't necessarily even need to re-accelerate their growth rates. Obviously, they would love to, and they've gotten extremely lucky on some of their purchases, like Remini. They spent not a lot acquiring that business. It became one of the biggest AI, photo editing and like AI platforms in the world. Like I think it was like a top 5 in the App Store. And obviously they've made good money on those types of acquisitions that they didn't spend a lot of money on. The really interesting part about Bending Spoons is that you realize that there's a lot of overlap between the types of companies that you don't necessarily need to build multiple times. So marketing and acquisition channels, they can use a lot of the same marketing and acquisition channels across multiples of their services. Payments and payment orchestration across multiples of their services, they can, do a lot of work with many of these businesses, get bigger discounts, really start to streamline some of those services. Data across many of their platforms, cross-selling across many of their platforms. So StreamYard, it's the tool that I'm using right now to, bring myself to you guys. I'm using StreamYard, one of their services that they ended up acquiring in 2024. They have since allowed to live stream to Vimeo and Brightcove, 2 other services that they also have acquired, and they can kind of cross-sell between those different platforms. They've made Evernote, an old app or note-taking app, to look much more like Notion, and there still is many, many users that still use it, right? AOL can seem extremely old, and monetization might not look great, but they still have like something like 11 million registered users and like one of a top 5 email platform in the world. So I don't know. It's quite interesting, but I don't know if I'm 100% sold just yet. Does AI take away from their business, or does it just absolutely supercharge their business? I don't know those answers yet. And I'm trying to find other people in this space that might be interested in Bending Spoons. There's a lot of things like they talk about how much they overpay for these businesses. They very, very rarely fail an acquisition offer. I think that which one was it? It might have been Evernote, or maybe it was one of the other ones. They were like 50% higher than the next highest bidder. Okay. Like they just push huge offers. They give those companies, they talk about it as being like, they're almost like Berkshire Hathaway like acquisition strategy, where they're paying what they actually believe that the company is worth, not what they think that they can get away with, because they don't want to get into, conversations about, hey, can we squeeze 20% out? Like the negotiations, you don't negotiate with Bending Spoons. Here's the offer, take it or leave it. That's it. And it's a very, very fair offer, but they don't overpay for it. They won't overpay for what they believe is true. I'm not sure I super like that strategy, but obviously it's working for them so far. Another thing that I don't know if I like about Bending Spoons, which they're very proud of, is they hire extremely young talent, unexperienced, like sometimes zero history. They hire almost exclusively 20s and 30-year-olds for those businesses, and they want to essentially not have corporate-like built-up, I get my lunch at 12 type experiences. They just want to start fresh. This is the type of work culture that you're entering. This is how you're going to come to this work, and they don't want to be plagued by potential other corporations, and they'd rather just train people from scratch. I don't know if I if I like that. They've also talked about paying some of their employees like unbelievable, like practically like 9-figure, like freaking, I mean, obviously not 9-figure, but like unbelievable high payments for running these companies. Like the people that run Evernote now, AOL, they are getting paid as if they are the CEOs of those businesses. And the people who are running those are in their, late 20s. So they've talked about how they're very proud about, making people's careers into something special. Much better than where you can get elsewhere. So yeah, I think it has been and constantly has been some of like the highest ranked workplaces to work at for many, many years. Italy's best workplace just in 2025, they got number 1. They got first place there. What company? I'm talking about Bending Spoons, brand new company that just went live. The way I'm looking at it is this a flash in the pan, fast moving, fast to burn, private equity, but not private equity, but like a holdco? Or is this the next Constellation Software? Is this the next Berkshire Hathaway? And that's what they want to be. I mean, you have to listen to the interviews with Luca Ferrari or many of the there's 4 co-founders. These guys are shooting big. They want to build the next $1 trillion business. They're a long way away from that at 25 billion. And they've proven out some pretty unbelievable growth. But there's also been signs, and the reason why the stock is down right now, and you can see quite a large pullback in the stock price since it ended up running up recently. They ended up getting to $58. Earnings came and they crashed. And this was based on one real metric. Whenever they first showed off their S1, they showed off, their businesses from, I think it was 2024 to 2025, organic growth came at about 21%, which is significant. They grew the business by, 100+%, but that was through acquisition. This quarter, they ended up showing off year-over-year organic growth of 3%. Last quarter, 6%. So really decelerating organic growth, that's the part that people are scared about. What I'm trying to figure out is, do you need organic growth? I don't know. They don't talk about how they care to grow the business. They talk about this in the S1, like in the, hey, just so you guys understand how we run the business, we don't care to grow them. Like, obviously we would love to, but that's not how we value a business, is whether it's growing or not. We're not worried about revenue growth. What we're worried about is returns, real cash returns. If we believe a company is going to return over the next 20 years consistently like $100 million, and, we're going to, over the lifetime of that company, without growth, just see a 20x, like, are we willing to pay $400 million, $500 million for that? So, do they use significant share dilution? No, actually, not at all. So that's why they lean a lot into debt. They do not do share dilution. They're very, very sensitive to their outstanding shares. And it's one of the things that they talk about is like, this is a company that is designed to generate cash, right? It's designed to build for shareholder returns. The reason why a lot of companies like Anthropic and OpenAI and many of these companies can dilute is because sky's the limit on the potential of these businesses, and they can just constantly shoot for what they believe those companies to be. For them, it's more of like a mathematical equation, zero emotion, where they say like, this is just going to be purely for shareholder return. And so if we're making way more money than how much the actual interest payments that we could pay on the debt, it makes way more sense that we do it in a way that we know how much we're spending rather than using the free amount of dilution there. They're a little bit similar to 100%. People put them in that bucket of Constellation Software. They put them in that bucket of Berkshire. But I don't know. Discarded cigar butts. Yeah, I mean, it's possible that that's true. Definitely possible, because they are buying into companies that people have forgotten about. But is AI going to essentially turn around and say, like, they walked into Evernote and practically fired every single person in the company. They're like, all right, our team can run this. This is super easy. Like, And that has caused a lot of controversy. But from an investor standpoint, I don't care what the controversies around the layoffs and stuff are. I want to know what their cash generation machine is. Am I going to make money on this? So there's been a lot of controversy with them buying up these companies, just completely reshaping how they look at the businesses and then fixing them up. I guess it's discarded cigar butts, but maybe artificial intelligence makes these businesses much better. What do you guys think? Tanner, is great meeting you, Marshall, and even Tevis. I sent you a message on a Mitts chat in here earlier. Ignore if you've already seen it. I don't know if I did see it, Charles. Let's see. I don't know if I did see it, Charles. I'm trying to scroll up. I don't see anything else. I'd rather buy Berkshire. Yeah. All right. Okay, but anyway, that's sort of some conversation. I'm sure I'll do more of a deeper dive on Bending Spoons. I get feelings about businesses sometimes, and I'm super founder driven. And Luca or Luke he's very, very sharp. And I can see that this team is thinking about problems in a different way. It's just sometimes, these people, you're either like the Fortune 30 under 30 and like these guys are brand new, unbelievable thinkers, or you're like looking at actual criminals and, people whose strategies get burnt up pretty quickly. Because Bending Spoon's strategy for acquisitions has absolutely changed over the last 2 years. The size of the deals that they've been doing and the frequency of the deals has really accelerated. People have gone from never hearing about this company to hearing about them constantly because, they're buying up Airtable and AOL and all of these companies. Like, it's just huge. Okay. It's a rule for me to be the dumbest person in the room. My motto was applied last Saturday. No, dude, it was a ton of fun meeting you. It was a ton of fun meeting everyone. I wish I could go through it even more. I just don't want to for the people that potentially were left out of the meet. I don't know. I was going through all the photos with my fiance, and I was like, and this is Tom, and this is Brandon, and this is Sam Can, and it's just like going through and pointing at everyone. I tried to make it a really big effort to make sure that I saw everyone there. Hopefully that was good and that everyone had a conversation with everyone. Blake, I felt like I didn't get enough conversation with him. But really, really happy that you were there, Blake. Seriously. Okay. Let's go back to some of the stocks. What's not working? Enovix 3. Wow. What's happening with Enovix? Is this not turning out to be a great buy? Look at this chart, man. This is insanity. Look at the amount of breakouts there. All lower lows and lower highs, though. Beyond Meat down 14. Oh, my gosh. Oof. Beyond Meat, less than a $200 million Market cap. When do we put that behind the barn and shoot it? I think we just have realized people don't want those Impossible Burgers. Monday.com down 5.3%. SoundHound down 5.6%. They had really good earnings, didn't they? Kind of lost all that steam from earnings. Still a little bit up from earnings, but not in the $8+ ranges. This is another name that I'm going to have to go through and really do a deep dive on. I know that, like, actually, can you guys tell me, like, was that Bending Spoons, like me just talking about a company that I'm studying? Are you guys interested in that at all? Are you guys interested in me talking about names that might be new to you? Because I know that people want me to switch it up sometimes. Then whenever I do, people are like, well, I don't want you to switch it up to this direction. I wanted you to switch it up to the companies that I have in my portfolio. And I spend a lot of my time, obviously, looking at new names. Sometimes it's not as deep as what I did with Bending Spoons. I just was constantly listening because it was, like, you know, really interesting for me. But if that's cool for you, even though I potentially might not buy Bending Spoons, or, you know, I might not make an investment in Wix, or I may not make an investment in eToro or something like this, at least to go through and say, hey, you know, I spent 10 hours yesterday going through and doing a deep dive on this. Do you guys want to hear about it? Do a poll. Not the right poll, SJ, but I will do a poll. But you guys got to be honest with me. If they're not names that you were thinking that I was going to look at, I'm sure 0 people thought I was going to be talking about Bending Spoons today. That you got to be open to that as well. Let's go ahead and do a poll. Do you want me to exploring? Because this is what I find is, like, obviously this is going to be a resounding yes. And I think it will be. But then, like, whenever I talk about Shopify and you know, these sort of names, the response from the audience is just like 0 people actually do care, and, like, views end up going down. So I get, like, these mixed signals between, like, of course we want to know what the next big thing is, but I don't believe it's that name, you know. Like, almost like Chris Camillo, whenever he's talking about Crocs, it's like, okay, well, we're talking about rubber shoes here. And then you realize that it's like, well, it actually is a big name. It's just, or it has done extremely well. It's just potentially not as exciting as looking at Nebius. Let me blow my nose while you guys put in that poll real quick. Talk about how the meetup was. I did talk about it a bit. It was great. Now, what I also said is, like, I'm going to try to keep up the Toronto-based events every year. And I want to try to double it every year, if possible, at least to the 400-person range. We did about 100 this year. I want to sort of shoot and offer to about 200. So that, I think, is going to include a much wider range. There was a lot of people after the meetup that didn't even know that I had potentially talked about it. So that was definitely surprising, because I felt like I was, you know, talking about it a lot. And then after the event actually happened, you know, come to find out that many people, you know, never heard about it, or they would have loved to have come, or something like this. But really freaking fun. Marshall was there, like I said. People thought that Marshall wasn't a real guy. Now, this is not a great photo of Marshall. So I feel bad for showing this photo, because he looks extremely, I mean, Marshall's a short dude, but he looks like tiny here. It looks like a child here. But that's Marshall right there. myself and Sodak Zach. It was unbelievable. Ethan right there, Max, Leah in the background, Andrew, myself, Jeff right there. Very, very fun. I think that was a picture of Kevin right here. That's Jeff. Another Andrew, Sam, Ken. This might be Kelly here. That looks like Grace, Tevis. That's Tevis there. Vasu and his sister. So much fun. Seriously, guys, thank you for coming out. It was phenomenal. It was phenomenal. Five eight. Don't even try. Don't even try. I don't know if you see any of the photos. Okay. Clarence. No, wait. Let's show some. Look at Clarence in chat. This is one of the mods. Absolute gem right there. He was at a MIT's New York meetup as well. Awesome. Very cool. Me being a weirdo, photobombing them. Tons of fun. Look at that. Do I look 5'8"? No one did bring a tape measure. No one brought a tape measure. I'm 5'11". Soda Exact says I'm 5'11". The missus was not there, no. Or else there would have been more photos and videos of the whole event. Okay. Let's get back to it. Stripe is reportedly nearing a deal to acquire OpenRouter. This company has seen a ton of potential deals. I think even Meta put in an offer to OpenRouter, if I'm going off memory. So that was nice to see Stripe there. I don't know. Maybe a payments company is going to do well in the token game as well. Maybe that's a great fit for them. Now, I don't know how the OpenRouter actual like use case of them is going to change under new management, or that platform can't be replicated. But they definitely do have the users right now, the data right now. Who knows if that's going to change if Meta or Google or some of these other companies see it under Stripe's management now. Okay. Let's 5'11" with or without a ladder? Oh, come on. AJ was there. He's giving me some credit. Thank you. Okay. Thoughts on Intel? I don't have a lot of thoughts. Honestly, I don't look into Intel all that much. I feel like there's a lot of focus on Intel, and for me, I just think like that kind of turns me away from looking into it too much. But obviously, I think they're going to do extremely well, as the rest of the AI names do extremely well. Higgsfield, by the way, speaking of AI names doing well, this is one of the companies that's actually creating their own models and, actually selling tokens, mainly based in the generative AI space, video, a lot of the creative side, raising another $400 million at a $5.4 billion valuation. Yeah. Yeah, Marshall's the same height as Amit. So that's how that looks, by the way. Okay. Amit's like, what? I'm a few heads taller than Amit, of course. Of course. Everyone knows this. Okay. Let's go ahead to CNBC. There was a couple videos that I wanted to check out. First off was OpenAI's president, Greg Brockman, talking about how compute is becoming the new oil. Let's have a listen to this and see if OpenAI's growth is turning around, which supposedly it is. A lot of enterprise growth.
Ask you a different question about the economics of AI right now, because obviously it appears that Anthropic's going to have an IPO later this year. I want to talk to you about the prospect of you doing such a thing in 2027. But it appears that the valuations of so many of these different tech companies are quite dependent on your own valuations, and not just what they are today, but that they have to continue to rise because embedded in some of their own economics is your very company. And so I'm curious sort of what you're seeing in your own business, but also, you know, just last week, and Becky and I have been talking about it, she had this great interview with Jensen Huang and a whole bunch of financial leaders who are going to be contributing potentially up to $500 billion to support this whole world. And there's a big question mark about whether these chips and these data centers are going to have the value that's needed to make all of this work.
So I'd say at a fundamental level, what we are doing, and you can look at this across so many different verticals of the economy. You can look at, we just talked about cybersecurity, which I think is an absolutely critical application of AI. And I think we're going to see lots of growth there. Software engineering this year has been totally transformed. We're starting to see every aspect of knowledge work really change, but also we're starting to see scientific discovery. We announced a couple weeks ago that our AI for $2,000 worth of compute was able to solve 10 long-standing math problems that had eluded mathematicians for decades. And think about that level of capability applied to biology, applied to material science. It's all starting to happen. And so all of these applications that we're starting to see, they're all powered by one fundamental resource, which is compute. Compute is really becoming the new oil, the new limited resource of the AI age. And our belief, you need to believe one fundamental thing, is that because AI is really about solving problems, the problems that humans want AI want to be solved, you need to believe that the demand for problems to be solved is unlimited, right? And that is something I believe, and that is something we have seen, that we have 1 billion users on ChatGPT, we have 2 million enterprise customers as well. And you can just see that the depth of usage as people have started to use agents is just going off the charts. Like every single company that tries these things, you start to realize that you can move in more ambitious ways than you thought previously. And so I think that we're at a world where we see what's coming. We see the shape of the future because that model exponential, that capability curve, that's continuing. We really have a roadmap lined up where the capabilities will continue to increase in significant ways that are hard to kind of explain in a succinct way, because it is really about being able to add value across every aspect of human endeavor and be able to help empower people to do more. And so I think that if you believe in human creativity, human ambition, then ultimately you have to believe in the power of what AI will provide.
Hey, Greg, I'd like to go back to cybersecurity, if it's okay. I agree with you. There's huge potential promise for AI. I have a lot of hopes about what it's going to do for healthcare. But when we saw the breach that you all talked about last month, where the OpenAI model broke out of the sandbox and broke into Hugging Face, I mean, we didn't find out about that, or you didn't find out about that until after Hugging Face had identified what had happened. They had contacted the FBI. And then Anthropic had to admit that they had a similar sort of situation. I just wonder, do you feel like you have your hands around this situation, your arms around this situation? You know what happened and you can make sure that something like that doesn't happen again? That to me was a brand new world and do we have any control over this stuff moment.
Yeah, for us, we took this extremely seriously. So for the past couple weeks, that we've been in really full postmortem, take a look at what happened, really up-level every aspect of safety and security and alignment within how we do these frontier training runs. So it's a real moment where we realize that we do need to up-level, and it's not a surprise to us in a fundamental way. We've always anticipated that this moment would come, but I think that when it actually happens, seeing the whole team kick into gear and to be so serious. And so we actually have delayed our frontier training runs in order to ensure that we have the right levels of controls and in place. And I think that is a really important thing, is that we as a field are sort of now at a point where these models are so capable, and that it's a dual-edged thing, because they're capable. It means that we need to ensure that they have alignment during training, that they need to be monitored during training in a robust way, but it also means they're so useful, right? And that is where that economic value comes from, because they are able to solve problems in these novel ways, and that we are
novel,
entrusting
unethical
them.
ways.
Right.
Like that's part of the problem. Like, this was intentionally a model that was set up to say, okay, if we take off some of these controls, are you guys not doing that anymore? Not saying like, okay, go solve the problem no matter what rules you have to break?
We are ensuring that there's alignment during that training process. Absolutely. That I think that alignment is a non-negotiable. And that is something we've invested in for many years, and really thinking about that as an integral part. So you can't separate out capability from safety, security, alignment. These are one thing, one system,
Greg,
one way.
Okay, so
That was useful. Really quick, I just wanted to switch over here. Tom Lee is actually on CNBC right now. I just wanted to hear what he has to say about today's market.
On the Department
Really
of Defense.
quick.
Here's the thing that, Tom, I wonder about the Wall Street Journal article, because when I see all that off-balance sheet financing, I start to remember Enron and all the off-balance sheet financing. And it's on top of that, you've got these structures with the private credit funds that have a holding company that's in the JV, and then there's a third company that actually is issuing the bonds. So in the end, who's holding the bag? And is that more obfuscation than actual good business? And should we be worried about what seems to be a lack of transparency in terms of who's really lending the money and who's going to be stuck with it in the end?
It's a great question, because I was a tech analyst during the dot-com and fiber boom of the 90s. And the people investing capital at that time were not of the same ilk and caliber of the Mag 7. You know, these were companies that were digging up railroad lines and doing those IRUs, you know, which was actually—
What's an IRU?
It was a revenue swap between fiber companies. So you could create hundreds of billions of dollars of contractual revenue. And today we have companies with really sizable moats and some of the highest profit margins and return on capital in history, and have, as the Bezos metric, have delivered trillions of dollars of shareholder return, that are now directing their investment on building a new moat around AI. So I have a lot more confidence that these are high-level board, well-reasoned companies investing, but they're eye-popping numbers. But the reality—
Why not do it on balance sheet?
Well, one, they could do it on balance sheet, but if they did, they would be taking up all the capital of the world and all the risk, and therefore actually make it harder for any— I would argue that that would make it harder to democratize AI.
Can I ask an accounting question? We were calling this off. I did get a C in accounting. I got a C, so I need to ask all of you to make sure I'm understanding this. They have off-balance sheet commitments because they're future commitments. Is that right? They're not hiding anything.
Yes.
They're not on the balance sheet because they don't flow through the balance sheet until the building actually begins. So in other words, this is just a different way to look at, if they say, okay, we're going to spend whatever amount in 2027. Can you explain to me exactly what these commitments are and why they're not on the balance sheet and when they will be?
Yeah. Well, I think maybe a good place to start is, I think that the revelations from the journal article are actually helpful, but they're giving people an incomplete picture of how financial systems work. Because if you do, the gross obligations of the financial system, it's multiple times the underlying assets.
Always, or just today?
Always. In fact, that's why Warren Buffett used to call credit derivatives, the weapons of mass destruction.
Are these credit derivatives that we're talking about, though, or these are just future spend commitments?
It's the same. arguably it's not that different, because if you did like gross exposure of swaps or options, like look at in any day, options contracts are multiples of cash underlying. So if someone says, oh, there's a hidden off-balance sheet risk that retail investors have 20 times the size of the stock market in bets, we'd be like, well, there's the offset. So I would say when we look at these numbers, it's giving a distorted view of the actual risk.
Let me just press this analogy one more. In other words, do you think that the spending is representing multiple possibilities of spend that's only going to manifest in one way?
I think, to me, none of these contracts are going to lead to criminal liability. Like, in other words, like a company can decide to cut spending in the future, and the contract should be weak. So, like, the $3 trillion isn't like, people have to sign over their kidneys to meet.
And Dryden, how should investors think about this? I mean, should they be worried, or should they be encouraged that, wow, it's not just $600 billion, it's actually an additional, 1.4 or up to 3 trillion. And so therefore that's a good sign about the future of AI. How should investors interpret all of this?
I think it's a good sign, because companies are making a lot of money, free cash flow. And what were they doing before? They were buying back their own stock. They didn't have anywhere to go with the money that they were making. And so I like it when someone's, no, I'm not going to buy back my stock, because I'm going to actually put it into the thing that I do best, which is grow and do these things. So I like that the capital is being redeployed into what these companies do, because that's their core business. They're not hedge funds. They need to be out there putting their money to work in what they do. So as a growth investor, I like it. I like CFOs and I like CEOs and I like boards going like, this is our fastball. We're Microsoft.
And you talked about the productivity litmus test. A lot of this, particularly the bonds, are based on revenue expectations in 2 to 3 years that are ginormous compared to what they are today. Do you think we get there based on what you're seeing?
56% of the companies today have an AI account, but only about 30% of them are, 30% of them say, hey, I'm seeing increased labor productivity, and only 7% say we fully implemented. So you have all of these companies that have yet to play. You have all these companies that are just now scratching the surface. We're moving from infrastructure to implementation. We're moving from proof of concept to rapid adoption. And this is an area of time where we think, margins are good. The wide moats are getting wider.
You think that can happen without a dramatic rise in unemployment?
Yeah.
That those productivity gains, because productivity gains come in some ways by replacing workers with AI.
Well, this is true, but you've seen this every time.
Right.
People got upset. The guys who were shoeing horses got upset when the Model T came out.
Right.
But next thing you know, they got a perfectly good job working in the factory, and they were making more money when it was over with. So I think that we see this transition, but I think it's positive. It's Jevons paradox. And
so it's a J curve. You don't see the bottom of that J curve being too severe.
No, I don't. And we only need about 30 to 40,000 jobs a month to maintain our unemployment rate now anyway. So the break-even point is less.
Yeah.
The adoption's more. Labor productivity is greater, and that increases profit margins.
I'll end by I'll just throw another major concern on the table. I mean, why not? Tom, 40 trillion in the national debt last night. What is your reaction to or take on that?
It's pretty shocking that we're in a booming economy and the deficit's growing. So
missiles are expensive.
Yeah.
Interest is expensive.
Yes.
Yeah. It seems like there's a lot of outflows. I agree with the folks who think that this is a structural concern, but the bond market today is signaling that it's completely okay with it. So I think as long as it's okay with it, the stock market is fine.
So that little blip in the 30-year, we saw those the deficit's suddenly an issue that we saw last week with that sale. You don't think that was really a big move, or that's going to continue? Yeah,
it is a symbolic rate, because as you know, maybe more companies are dependent on the spread to the 10-year.
Right.
So that's the more important rate to watch. But again, I don't think it makes any sense to not be fiscally sound as a nation. So it is trouble.
Hard. It's really hard to figure out.
Yeah.
What's amazing is that 10-year range has been so tight for so long. And everything tells you that should be higher, but it's
here's the crazy part. It was sub 4. I'm stealing Rick's lines from his mouth. We were below 4% on the 10-year right before the Iran war broke out, and oil prices but now the oil price is back down, and the 10-year is at 471.
Right. And you could argue oil should be higher today and everything else, but it's not.
Yeah. Dryden, a quick final thought.
Well, the short answer is oil in the 80s, we're fine. At low 80s, we're fine. The economy works fine. And then if you get down into the 70s, we get to $3 gas again. So I think that at some point this resolves. Look, economics beats politics every time.
I don't know about that.
And sooner or later, we're going to be able to be in a situation where we'll have better economics.
Dryden, I want to believe you. I will hope to believe you. Tom, thanks so much for joining us, guys. We appreciate it.
I don't know what is their connection, Tom Lee and Dryden there from Pence Capital? How do they overlap? Regardless, I don't believe in, and I think that people are waiting for this shoe to drop in terms of artificial intelligence bleeding into the enterprise is going to lead to mass layoffs. And there's going to be areas where there is layoffs, of course, but that's through all the time you end up seeing companies adopt Salesforce. And then there's people that need to be laid off, or new HR softwares, or really there's a ton of different areas where we adopt software as a service and that requires potential layoffs, but through those booms, even coming out of COVID, we had started to head towards some of the lowest levels of unemployment that we've seen in an extremely long time, with, mass amounts of new software adoption. Why aren't you seeing layoffs in the software as a service boom? Why is it artificial intelligence now the tool that is just going to completely remove all use case for humans? It is a tool, a much smarter tool, but it is a tool for humans to use, and I don't think that companies are going to optimize for cost cutting. I think they're going to optimize for revenue growth. And what you realize is that, yes, your individual employee can do a lot more. Well, great. Instead of guiding for 30%, you're going to guide for 35. You're going to guide for 40% growth. The companies that are guiding for 5% growth will guide for 9% growth. I think that that's more the angle that most companies are going to take, and that the companies that are failing to gain in market share are losing out, have low customer retention, are going to blame artificial intelligence, but really they should be blaming their competitors. And that is what's going to lead those companies to lose, because their competitors are hiring like crazy, And the same thing with Salesforce and ServiceNow and all of these different services are going to need to go to the wayside. And then you see Anthropic be mass hires for engineers that know ServiceNow or Salesforce, or many of the software as a service tools that even they use at the most AI forward business on earth. I think there's going to be a mass amount of software that's still going to be used, a mass amount of humans that are still going to be needed in the workplace. It's just, we're going to have new tools to get the work done. And that, until I see the opposite, that's the only thing that I can believe, because that's what the data is pointing towards. And the people who doom and gloom and stay out of the market waiting for that bust to happen, it's going to be the same thing that's happened in any other market cycle, is that you will have sold too early and miss out. And then, years into the bull run, you'll feel, before the next correction, you'll feel that you had missed out and it's now time to get involved in the party. And then you'll get hit with a, sell off there. But those types of cycles, I think, are ones that repeat itself constantly. The psychological cycles of the start of the run being the top, we're not quite done, euphoria hits, that's when people get most excited and every new investor gets involved, and then that's actually where the crash ends up happening. But you can see it in the way that Micron and many of the Mag 7s and the constant skepticism of these companies being able to make profits, or durable profits, is actually stopping from much of the euphoric run-ups in these companies. And most of the run-ups that we're seeing in these businesses are actually driven by earnings, not by speculation on forward earnings, which is what you would see, I think, whenever you look towards like a SpaceX or a Tesla or some of these businesses, which I think deserve premiums, but sometimes those premiums can get quite ahead of themselves, and people are not waiting for 12 months from now. They're not waiting for 24 months from now, but they're looking at the company from 10, 15, 20 years out from now. And I think that that's where valuations can really balloon and get a little bit scary. The bust will happen eventually, but there's always an investment opportunity somewhere. I mean, what bust? Like, we just saw a massive sell-off in artificial intelligence over the last couple of weeks. Like, if you wanted a bust, we ended up seeing Micron drop from 1250 down to, like, I think it went into the 700s. Is that not the bust? Was Lumentum, like, many of the components in the trade took 40, 50% drawdowns. Nebius went from 300 down to 160. That wasn't the bust that we were looking for. Like, what are we ultimately looking for? You know? And I think there will be times when the S&P 500 will see broader sell-offs and people are extremely worried. But most of the time, that's going to be more macro-driven, which might be the conversation that people are seeing right now. Oil prices, Strait of Hormuz, Trump bombing Oman, like those types of conversations I definitely would be, or those types of topics I would definitely be worried about. But that has nothing to do with job loss due to productivity gains. You know, those are different topics. Strait still closed, Russia oil getting blown up, 100%. But yeah, I wouldn't blame Anthropic. Okay. They want the 100 baggers. I mean, literally, I don't know if there's a single 100 bagger that you can get without large sell-offs. Most of the biggest companies that have seen massive capital appreciations, the Metas, the Teslas, the NVIDIAs, the Googles, all of these ones have had multiple 50+% drawdowns. You like, if you want a 100 bagger in your portfolio, you need to be extremely early and you need to have balls of steel. Both, I think, you know, is hard for the average person. Okay. Tesla Roadster, or sorry, Tesla is promoting the Roadster on their website. They also put 620-mile range. Now, I don't know how exaggerated this is. I also don't think, you know, their most top of the line product that they might end up selling is going to be the one that is hitting huge numbers, but could potentially put Tesla back in the conversation of like popularity and check out their products. Maybe you end up seeing more Model 3 growth because the Roadster ends up coming out. I'm not sure. I know the Tesla Model 3 like had a decent refresh recently, but like I would like to see those constant improvements where they end up looking at the car every 4 or so years and like constantly putting out updates. I know they are doing that from the software side, but I still just don't. I find the model to be just a little too bubbly for me right now. I like the sharper like Model S look, and then they ended up canceling that. Okay. Speaking of the meetup that we had, by the way, Blake, dude, the timing could not have been better. S&P at all-time highs. Many of the calls that I've been talking, like Nubank finally started to see some appreciation. Reddit just got entered into the S&P 500. CoreWeave, Nebius ended up skyrocketing. NVIDIA back above 220. Like, I was like, thank gosh. You know, the timing of that event was so much nicer that like we were having a couple drinks, but they were celebratory drinks. This was not a therapy session. That was very nice. Super lucky. Hopefully that happens again next year. Maybe we'll avoid the June, July time as sort of like a concern about that. I actually don't think the Cybertruck is ugly. I'm not one of those people. I think it's cool. Like, you know, my brother's a plumber. He's a blue collar guy. For a utility truck, I mean, I think he has mainly vans and stuff like this for the type of work that he does. like the Mercedes. I forget the name. You guys know the one I'm talking about. Those I think are actually the trucks that he leases out, or the vans that he leases out. But like, I still could see those being useful. The problem is, and the reason why I think that Cybertruck is such an immediate flop was the political overlap. You can't buy it because you're worried that someone's going to scratch a key against your truck or something like this. And yeah, maybe you have Sentry mode on, maybe you can find who it is, but it's not going to stop the headache of you having to go through your insurance and all this stuff and get it. Yeah, the Sprinter vans. Yeah, the Sprinter vans. Thank you. What stocks did you recommend to your brother? I don't know. I don't know what you're talking about. Politics aside, it's an ugly. I definitely agree with you. It's a acquired taste. I don't have a problem with it. I don't have a problem with it. I think it looks. I think it looks fine. I've been in one. They're super comfortable. Yeah. Do you have a fintech video with ranking all your fintech positions? Curious about opinions on Pagaya and Figure. Well, I don't have a video with Pagaya and me talking about Pagaya and Figure, but I do have some fintech videos talking about Nubank and SoFi and Cash App and PayPal and like how I rank all those businesses. Spoiler alert, SoFi and Nubank are S tier. I like those two. Okay. I heard that your brother's a blue collar guy, but maybe I misheard. Well, my one of my brothers is definitely a blue collar guy, but I don't recommend him stocks. I think for someone like him that runs his own business and has like a bunch of trucks on the road and growing a massive business, like for him to, pull money out and turn it towards stocks or the S&P or something that wouldn't end up freaking him out, 0 point. Like his return on his money that he spends on Google ads or something like this to get another customer that he can go serve or another business or something, like it just makes way more sense for him just to focus on his business. So I don't recommend him stocks at all. It's like those that can't do teach. Those that don't want to start the business, invest. That's but for him, his business is growing extremely well. So he just throws it back into the company, and that's done well. You got to convince him to invest. I convince him that literally the opposite. Like, throw back into your business. You're young. He's like 33, 34. So he's just growing. Okay. Does he tell you have soft hands? Probably every day. He's a plumber. And he's not tall. The only taller person than me in my family is my dad. My dad is tallest. My dad's like 6'3". But I'm the tallest out of his spawn, his kids. I think both my other brothers are 5'10" and 5'9". Okay. Yeah, I probably have the lowest T levels out of them all. That's funny. Tanner, did you ever pay your tuition to the market? Any big losses initially, which taught you a lesson? For sure, yeah. I mean, the one that immediately comes to mind is Barrick Gold. You know, I thought I was smarter than the market, and I thought that I could time. You know, we were going through a massive bull market, and then I was like, okay, well, this is going to come to an end, and investors are going to rotate into gold. And I started putting my money into gold and gold miners and stuff like this, and that was like my initial first loss. And yeah, I might have been down like 50-60% on that name. Like, it was crazy. And I remember like Warren Buffett bought Barrick Gold, and like all of these things were like contributing to why I was buying into this name. I come to find out Warren Buffett bought it and then sold it in like, there was like a quarterly report showing that he bought, and then the next quarter they completely sold out. And I was like, appreciate it, dude. Thank you. Lost more on Barrick Gold than Skills? No, I lost more in Skills for sure, but I had a lot more money then. So they talked about initially paying my tuition. Definitely Barrick Gold was much earlier than Skills. I lost a good amount of money in Skills. But I learned a lot of lessons there too. Like, I think the really big lesson I learned with Skills was that what do the unit economics look like whenever you're not paying your users? Like, is this sustainable, you know, completely over time? Or am I just looking at what a company looks like whenever you put every dollar into sales and marketing? So it's also the thing that made me worry about HIMS, because HIMS had a huge sales and marketing push. And there's other companies that were in that sort of hair loss and ED space similar to HIMS, like Row. And I was like, okay, are people investing or are people using this product because they believe that it's better, or that's the one that just reached their algorithm first? Turned out to not be that. Obviously, HIMS has continued to grow and they've done very well. But that's what scared me out of that deal, was it felt like they were being held up by their marketing team, and the unit economics might not work out the same. Yeah, Andrew Paradise screwed me. But also, I don't blame Andrew. I blame myself. Skills was not a good company. And that was another thing too, where I didn't like the product. I didn't believe in it. But I just saw in the numbers that other people did. And this is why I think that it's really important to buy what you know. And I've done well with names like that, like Shopify, for example. Like, I absolutely knew the product. I was trying to start businesses back whenever I was younger, and I was trying all the different Square Spaces and, you know, Wix and all of those different places. And I just constantly paid the premium for Shopify because it just worked. And the more I began to learn about that business, the more that I fell in love. But the initial reason why I looked at Shopify was because I liked the product. That's helpful. Your loss on BMNR, what's the lesson there? Well, I'm honestly not quite sure on BMNR just yet. I don't know if I'm not out of that one yet. I don't have a booked loss. I think that obviously you can get caught up in the price of Ethereum. But I also think that because of that sort of 4-year cycle that we constantly see, I'm not sure that this Ethereum cycle looks any different than the last cycles that we've seen. Like, to say that there's been a thesis that has been broken, I don't like, definitely should have done more research into how Tom Lee gets paid. And I actually think that throughout the couple of quarters, he has, and you guys are going to hate me for this, but I actually think he looks better now than whenever I first started. Like, I had put up some videos saying, like, I really don't like the direction that BMNR is going. I'm really hating how they are constantly buying in under MNAV. And there were a bunch of people who were still very much on the BMNR train that were defending Tom Lee's actions. I'm happy I didn't. That turned out to be the correct decision, not doubling down and avoiding BMNR. But I don't think that it's been proven yet that Ethereum is not useful. Like, look at Robinhood Chain, look at the activity there. Look at what the NASDAQ is doing. Are we still certain that equities are not going on chain? Like, I'm not sure of that just yet. I think it's been all of months, so definitely I think that looking back on it, I would have just acquired Ethereum, but I'm not anti Ethereum in any way. It's definitely opportunity cost for the time being. That's for sure. I can attribute or I agree with that sentiment 100%. Okay, NVIDIA's lost its run today. It was at 227. We're now seeing some continued red candles here. We're up like 0.8%. Now we're only up about 0.1. Meta still down about 3.8%. Microsoft down 3.2. Oil prices also climbing up. Maybe some oil prices recorrecting, heading a little bit back, just slightly back down, but 60 cents starting to come back. But literally the second we started our live stream, like at 1 o'clock, oil was at $82 and just immediately climbed up. Now, over the grand scheme of things, we've been at higher prices, but obviously comments about bombing Oman and, keeping the strait closed. These are not great things that you want to see. Nebius is dumping. Uh-oh. Let's go take a look. Oh, there might be a story. Give me 1 second. I mean, it could be. Like, you even see where it opened this morning. But it does seem stark straight out the gate. UBS expects NVIDIA to beat fiscal second quarter revenue expectations by $3 to $4 billion, with revenue reaching 94 to 95 billion. That would be over 100% growth. For fiscal quarter Q3, they expect that guidance will come in at $108 billion and believe that revenue could ultimately exceed $110 billion. Blackwell demand remains stable while Rubin units are beginning to layer in ahead of where it should be and showing a more meaningful revenue step up into fourth quarter for NVIDIA. They said Rubin sell-in accelerates towards 500,000 GPU units per month and Blackwell begins to wind down. They have a higher cost, so they'll have better margins on Vera Rubin. Some of the credit risks are outside of NVIDIA's control, and we think that these numbers are more important than the narrative around AI, infrastructure spending, and ROI on the data centers. They said, coming out of the earnings call, we expect investors to gain greater confidence in the path towards $15 for calendar year 2027 and $20 in calendar year 2028, which should keep the stock grinding higher. Timothy Curry putting out a pretty good report for NVIDIA here, yet the stock not really seeing a bump up on this news. Let's see for Nebius. I didn't see a story on Nebius just yet. China's net new loans dropped to negative 50 billion in June, marking only the third ever monthly decline this century. Oh my gosh. This is crazy. This is a broad measure of new banks lending in China and a key gauge of overall economic activity. The decline was also more than 3x larger than expected. 3 times in the last century have all happened, after 2025. So this has all been in the last year and a half or so. Have been the only 3. Oh, actually, there's some. Marks the third only monthly decline this century. I see a couple of them. There's about 3, 4, 5. I see 5 right here in the last 20 years. Am I looking at that wrong? Okay. Either way, there's definitely not been any bars that have shown up that big. Let's see. Nebius is continuing the sell-off. Anything? Ratings downgrade? Okay. Trump said that we're taking out millions of barrels of oil a week from the Strait of Hormuz. It is open. We control the strait. And that Trump also said that they are not seeking an extension of the Iran MOU. Okay. I guess a Nebius downgrade ended up coming in. I don't see that just yet on my page here, but maybe that will end up coming through. All right. The strait is controlling us. I mean, it's true. Let's see. Okay. Cerebras still holding up its gains of 16.5%. CXMT now up 12% today. Wow. I love that we can end up following this name. This is amazing. This is a new Chinese memory name. Hopefully, well, not hopefully, but trying to compete against the likes of Micron and joining into the DRAM space. And although it was mainly for consumer-like products, they also talked about making data center memory as well, which I think had, kind of started a little bit of the sell-off of the Microns and the SanDisks of the world. But yeah, I'm not seeing anything on Nebius quite yet. Ray Dalio says he sees the classic signs of a bubble with AI, says the stock market looks like the run-up to 1929 or the 2000s era. Ray Dalio calling this. He's become so bearish over the years. I used to follow Ray Dalio, practically 10 years ago. He used to be a bull. Then he started selling books, and then it was all downhill from there. Okay. Mike and gifting 20 gifted memberships. Jesus, brother, thank you. Holy. Mike, and when are you coming to the meetups, eh? When did he not think we're in a bubble? No, he used to be quite bullish. And people downplay. This is not some analyst. For anyone that doesn't know Ray Dalio, he had the most popular fund in history. I think, wasn't that true? Bridgewater Associates. I think they had some fund that got to 120, 130 billion. I'm going off long-term memory here. $130 billion of assets under management, one of the largest funds in the world. And then they just started declining all new customers. This was back whenever Ray actually ran the fund. He doesn't anymore. He stepped down. But yeah, it's been a while. No, I'm not in Cerebras. Well, there's going to be a need for all different types of chips, especially one that's in the ultra expensive, super fast latency. But I've got NVIDIA and their investments in Grok, which should keep me diversified in more the inference chip style. Which also, they just did a down round, and NVIDIA, although they're licensed, they have like a huge licensing deal with Grok, and then also kind of acqui-hired Jonathan Ross and many of the top guys from Grok. They had a down round from like 4.9 billion to like 3.5 billion. NVIDIA still invested in that company in that down round. Pretty wild. Bridgewater Associates, 92 billion in assets under management. James, can you double check for me? Is that I'm almost certain that they had above 120 billion. Are they down from their all-time highs? And where was it historically? I'm talking like 2018, 2016, somewhere around there. Like around whenever Principles came out. I could have swore it was over 120 billion in their main fund. I'm going off pure memory here. Tanner should do a market history Mondays. Well, I don't know enough about it. I think that's, for people that have actually lived it. I don't have enough market history to know the ins and outs. There's definitely things that are not written into history, or at least are not told very well, that I think you kind of had to live through. 2022, they had 168 billion. Wow, they've lost a huge amount of followers on Bridgewater. Okay. Yeah, I remember it was much higher than that. Because I used to follow Ray Dalio a lot. Like he was the guy. And then he turned super bearish, and I've never cared too much. Okay. Let's continue here. Figure, I've got Roy in the chat actually, but Figure's up 12.4%. This is a name that he's been following since the start. Funny enough, the actual founder of SoFi, Mike Cagney, is now I don't think he's the CEO. I think he might be the president of Figure. There are a couple people that initially have started that business. But yeah. Yeah, Dalio started paying way too much attention to China. He was flying out there. This dude was doing the John Cena thing with the ice cream and been chilling. Like he had abandoned the United States. Do you guys know that video, by the way? That's a great video. John Cena speaking in Mandarin. Executive board chair. Got you. Yeah. Dude, I mean, I'm sure he's a very, very great thinker of businesses. Obviously, if you've been around for multiple $billion+ businesses, you obviously have a very keen mind. He's a crazy person, though. Like there was some short seller that went like against his business. I forget who it was. And he was tweeting out into the public, like how, like if he saw him in the streets, he was going to kick his ass. Like he's like swearing at this dude who, didn't like his company. Yeah, it was wild. So he's a little bit of a loose cannon. I can't follow him. He literally got removed from SoFi for creating like a horrible work environment. So, hey, happens to the best of us, I guess. Okay. I'd be the same, to be fair. Yeah, but you're not managing multiple $billion+ businesses. Air Test Systems up 6.9%. SanDisk up 8.3%. Credo Technologies up 9.2%. Coherent up 9.4%. Let's check the actual like AI watch list here. Most of these names are extremely green. SMCI down 4, Meta down 3.8, Microsoft, Nebius down 2.3. A little bit of a downgrade, although I haven't gotten confirmation on that just yet. For the most part, a lot of these AI names doing extremely well, yet the NASDAQ is still down 0.25%. Let's check a heat map on this because I want to know what's selling off if it's not the semiconductor names and the AI names. Semiconductor equipment's up, semiconductors. Internet content and information down 1%. Software down 2.4%. I did not check IGV. IGV down 1.8%. Palantir down 0.3, still over 170, 173 on this name. In fact, I actually just pulled up Palantir's institutional ownership that just got updated very recently. Look at this update. How incredible is that? Huge jump up in institutional ownership ever since we started to see these Q2 earnings come out. Pretty wild. Okay. I still remain a, very bullish investor of Palantir. I think they're doing great work. Maybe not all software will survive. I'm sure there's going to be some names that end up getting sold off. But Palantir, I don't think is going to be one of them. So they're still up. Or sorry, not up today, but up in the last month, about 31%. Tanner, I'm so pumped that you're a fellow shareholder. Nice interview with Big Bad Chad. Chad's great. Yeah. I'm starting a... What about Path? I've got nothing to say on UiPath. There's some names that sort of like get into focus, and I'm curious where you guys are focusing on UiPath. I've been seeing this name, get passed around a lot. Same with AppLovin. That has really come into vogue recently. So I'm curious as to where the focus on UiPath has been. I've been seeing a lot of comments about it in the last 2 weeks. Okay. Is genocide great as well, Tanner? I mean, they're a software company, How, and I barely even know what you're referring to, but if governments make bad decisions with Lockheed Martin weapons, do I get mad at Lockheed Martin for making the weapon? Do I blame the gun or the knife for the terrorist or whatever that ended up using those tools? Like, no, I think, what, from me, my perspective is I'm buying into a company that I think is being utilized by more and more governments and also commercial clients that are paying a hefty premium to use a service that they believe is better than their competitors. That's what I'm focused on. I'm not making a political statement by investing in Palantir, and I don't think it should be viewed as one, But yeah, I don't know. You also, if you don't like it, then that's fine. But the whole, crossroads here. Roy doesn't like Meta, for example. You think that he has a different view of me because I do own Meta or something like this? I think you have your ways of investing. And if you take it out on me for investing in Palantir, because I think it's going to be a good shareholder return, then I don't know what to say, brother. You know, you can make your own decisions. But if you're the type of vegan that like can't sit with your friends and disregard your family members because they eat meat, like I would rethink your decisions in life. Okay. I'm full port hood currently. I think that's pretty interesting. I like hood, but I also think that they're you know, their fluctuations in their business is too much for me to want to like full port it. When will you buy app? I think next quarter will be super pivotal in terms of seeing if they can reaccelerate revenue growth. I think that will need to happen. But I've said 1,000 times, I like to buy companies that actually own the user. And I don't think it has a small TAM. I don't think any of those things. Like, Adam seems like a super capable founder. He's great. But I just really like owning the user. Okay. One of the best parts of the meetup, I just realized I heard dude, there was literally no politics talk at all. Not even a little bit. It was actually phenomenal. It was a great meetup. Okay. Let's see. SanDisk. This company got as high as $1,828 today, falling ever so slightly down to $1,780, but we're still up 8.5%. Really strong day. As we ended up seeing from that report from B of A, pricing in memory has only improved month over month. It's up 8%. Like, we could genuinely see that like Micron and SanDisk end up posting even higher growth than what they ended up showing off. Micron, I think, guided for $50 billion to $51 billion. Excuse me. That could potentially be short of reality. If they come out and do 55 billion, you're going to need to come out and, you know, reevaluate that company once again. And people can point to it dropping off in 2027 because like 20% of the capacity has now been added. But like, people are acting as if like 5x the amount of fabs are about to come online in Q3 of 2027. It's like, okay, we're getting a little bit, we're getting a little bit of a additional amount of capacity. Okay. Chris likes those Micron numbers. I mean, I think he did change his perspective on that name. I think that the initial concern about Micron to begin with was misguided. I think they'll break above, like they'll find higher highs. I don't know what day that will end up being, but like companies that can continue to appreciate and beat expectations month after month from brand new companies that are creating their own evaluations of this. If you believe in NVIDIA, you have to some degree also make large long-term bets on many of the aspects of the entire chain. You know, Micron has been very well positioned for this boom for a long time. But if it continues and you have a large position in Micron, AMD, these sort of names, like how can you pay 150 times premium on AMD and then not want to pay a 5 times premium or a 8 times premium on Micron? Yes, pricing could absolutely deteriorate on Micron, but like by how much? Like, let's say the multiple on Micron ends up doubling and instead of 8, it's 16 times. Is that expensive? Is Vertiv heading up? I need that for the draft. No. No, I need Vertiv higher. Just for the draft, though. I don't actually have it in my own stock portfolio. Chris, to be fair, is leading in the number one largest position. Viva Systems up 57% in the draft. But Fluence is killing his performance, down 49%. I think I saw this dude in Toronto this weekend. He was wasted. Tevis, do you want to jump on for a minute? Do you have a second, or are you in meetings? But Saul, how do you value the lawsuit liabilities for Meta? I think that there's been a ton of these concerns. Thank you, by the way. Holy. I think there's been a ton of these concerns for Meta over the years. I've not given this a ton of thought, so I don't actually know the size, but like they've paid out massive fees to Europe for tax implications, for lawsuits, for all the, like they just constantly get battered down with these types of fees. It's the nasty part of the business that they're in, but during all of those consistent beatdowns, they've gone and grown a business from $1 billion a year up to 200, and which will be, you know, over $250 billion per year. So I'm not necessarily worried about the next 2 years of Meta's business. I think that their social media platform will be around for a long time, and whether that's available to people of all ages or people that are only above 16 or however that ends up, you know, working out. I still really like the company, and I think that there's zero credit being put into their actual strategy of buying data centers and going after MuseSpark. I think if all works out, MuseSpark will be massive. And if it fails, then they'll sell compute. And it's sort of a win-win for them. And yet I think most of the, you know, Wall Street analysts and the reports that I have seen have only really judged this company based on advertising revenue. And that's not going to be all of their revenue. I've not really given a lot of thought, so I apologize if it's all on the clarity of the answer that you're looking for. But the truth is, I just don't have a true answer right now. They seemingly always pay some form of fee every year. It's just like the cost of their business. Where do you see opportunities in this market still with this recent run-up? Well, I'm not buying anything right now. But I would look in very much the similar areas that I have before. I think the Nebiuses and the CoreWeaves of the world have either improved their guidance or maintained them throughout the previous quarters. The same reason what brought them to $300, the fact that we're not seeing them at those all-time highs. You know, these names can be extremely volatile, but in the long term, do you believe that they're going to see $8 billion of ARR? Do you believe that CoreWeave is going to get to $30 billion of ARR? If those estimates still happen on higher and higher margins, and in fact, they're selling their GPUs at better costs, they're creating new lines of revenue, it's like, why do I have to constantly be looking for the next best thing whenever I believe for the most part in a lot of the names that I'm already looking at, I've found those next best things? Joe says, stop pumping your own stocks. Joe, dude, shut up. Like, this guy asked me, where do I see opportunities? What am I supposed to talk about? Other people's stocks? These are the opportunities that I'm seeing, you idiot. Like, what else am I supposed to say? Like, do you not want me to buy the things that I think are opportunities? Oh my gosh. Of course, I'm going to talk about the stocks that I own whenever people say, what are you buying? That said, I fully invested. Okay. Can't jump on right now. Sorry, dude. No problem, Tevis. Tevis is never available for me. I treat him out, got him lunch, got him dinner. I'm making sure that his thirst is quenched at the parties. He does not call me back. Had to watch 3 ads before watching the stream. Could you change that to 1, Tanner? I have literally zero control over that. That's just that's YouTube. We don't have actually a lot of visibility into how to do those things. You just select, do you want ads before the stream, during the stream, or like that sort of thing? Do you want YouTube to handle the ads? Yeah. We don't get to choose, the type of ad or anything like that. Tanner, do you like Rivian? I don't know. I haven't really given it a hard look. Yeah. Did you buy CoreWeave at this price? Well, where are we at right now? 108. I mean, I practically was. This is a little bit higher than any of the purchases that I've made, but you also have like time appreciation. So at the time that I was buying it at 105, like my first ever buy was at 105. We didn't know that the company was going to put up $2.5 billion worth of earnings. Like months have passed and the company has grown 112% year over year. Some definite appreciation over the months that I was holding it for, 2 months or whatever. Now my average has gone much lower than 105 because we've gotten prices as low as like in the 60s. But yeah, I mean, I don't think that would be too far off from the initial 105 purchase that I had. And I think that the business is stronger today. Has your thesis on SoFi changed with the layoffs? No, not at all. These are not bad. I don't think that these layoffs are bad. I talked about it at the beginning. Every year they do these types of trims. It might even be every 6 months or so. There's always these areas. These are not mass layoffs. They're not like, hey, we're trimming 20% of the workforce. These are what I think in areas that there's been a little bit of bloat and just making sure that they're maintaining tight teams and, not over-investing in areas that aren't working. They are going to continue to throw 70% of their money back into reinvesting in the business. That like, I bet you quarter over quarter from last quarter to this, the one that we're going to see next Q3, headcount will climb up because it has every quarter. But the layoffs are actually a sign of them making sure that they are, still paying attention to their expenses, still making sure that they're making the right the right decisions constantly. I think it's a sign of a healthy team. Remember, Robinhood, growing from $18 to 100 plus, had constant layoffs. Yeah. Tanner, do you know that Barrick Gold has done over 172% in the past 3 years more than SoFi? Yes, I do know that gold has appreciated, but it's not changed my mind on I'd rather buy businesses that I understand. And I don't think mining of gold is something that like I can't understand or something like this, but it's also like really good timing because there were lows 3 years ago. Sodag Zach is because South Dakota Zach? I did not realize that. I'm sorry, Zach. I'm slow, bro. I just realized that. Did you go to Shake Shack or the Keg before the meetup? We went to some restaurant and like weirdos, like everyone at the table ordered the same thing. We got like a bunch of ahi tuna bowls. Okay. Will you play GTA 6? No. No. I'm excited to see what it looks like, but I can't. I would get addicted. So I just stay away. I'm really good. Like, I'm not always great at making the right decisions in terms of like, hey, I need to start doing these things in my life. I'm super good at cutting out the things that are bad for me in my life. You know, video games can be extremely healthy for some people if you know, play them in moderation or something like this. But I just was, you know, focusing too much of my time and effort on games. So now I just completely do not game at all. And that probably stopped about like 5 years ago. 5-6 years ago. Does SoFi have personal loans risk? Yes, definitely. I think you're absolutely killing it, Tanner. You're making all the right decisions, especially locking in that goddess of a fiance. Thank you, Kelly. Thank you. I showed Kelly my proposal. We got it recorded. Yeah. Okay. Is there anything else that we need to cover? Let's check CNBC really quickly. I think I covered most of the stories of the day. We will do a summary. That was one of the things that I heard a few times during the meetup yesterday is you guys actually love the summaries at the end to talk about the stories that have happened. So I'll make sure to keep up with that. President Trump orders Pentagon to cut back military exercises with South Korea. Well, okay. September Fed rate hike very unlikely, says Goldman Sachs. Let's have a listen to this. This could be quite interesting.
Market is still too hawkish on the Fed. The firm now calls for a September hike very unlikely after a run of softer retail sales and weaker jobs and cooling inflation. Rick Santelli joins us now. Rick, what's your take?
Well, first of all, Robert, I'd like to welcome Goldman to my side of the equation. I've never thought we'd see a hike this year, especially not in the September meeting. But first of all, let's start out with what the CME is looking like with respect to probabilities on their website. And right now it's hovering right around 33%. So we're talking about 1 in 3 possibility of a hike at the September meeting. But Goldman, well, they're well-founded, in my opinion, on their comments today. Let's look at the last 3 job reports, shall we? Non-farm in May was positive 63,000. In June, it was 20,000. In July, it was minus 23. By my math, over 3 months, our average job creation is 20,000. Now, many would say, well, that's because between immigration and population growth, positive 20,000 isn't too bad. Well, you know what? Maybe it isn't as we readjust our baseline, but for the moment, it is a deterioration. And 3.2 year over year average hourly earnings in the last jobs report was the weakest rate in 5 years. Now, if you consider that 474 is the high yield close from the last day in July for a 10-year, Robert, you're right. It has been a compacted range. And even though it has gone from 394 on Feb 27 to where it is today, with big jump in nominal rates, the reality is it's been slow going. And percentage-wise, the rise in yield is much more significant than what we're looking at in oil. But maybe it's the rate of change in supply side questions in the Middle East, not so much the price of oil. We were under $70 briefly, and I understand we're not as low on the second chapter of what we're going through in the Mideast, but I think the stickiness of it and the constant barrage by Fed officials and benchmark Fed watchers that the longer this conflict goes on, the more it's going to hurt the economy and make a situation in inflation more permanent. I think that really explains what's going on. And I think also at 8:30 Eastern, when we had a strong empire, did anybody notice how rates jumped? They're becoming much more sensitive to what's going on in the economy as well.
So, yeah, there is definitely some red candles that are coming in that are spooking people. I see that in the chat as well. AMD now down about 1.8%. I'm not seeing too many stories. This definitely could be on some of the treasury yields kind of climbing up. Maybe this is concerning people in equity markets, maybe taking some chips off the table. We are also seeing, what was it? VIX, is this still climbing? Well, we're not seeing the spike that we saw earlier, but still up 6.8% on the day. NVIDIA still green, 225. Love to see that. Micron, obviously, back above 1,000. And SpaceX also back above 145. This is about to be a $2 trillion company. So there's definitely still a lot of green here. But there is definitely some red names starting to eke in. A Novix. Let's see what else is moving. A lot of the stuff that's down are like extremely small names. I think out of the really big names, we're seeing Lithium America is down 7.5%. That's kind of wild. Reddit down 5.6%. Carvana down 5.5%. Trade Desk down another 5%. This is a $13 stock now. That's more than a 90% drop off since their all-time highs. Norwegian Cruise Lines down 4.2%. Upwork, Blue Owl Capital down 4%. T1 Energy is down 4%. SMCI down 3.8%. Fastly down 4%. Centrus Energy. A lot of these energy names really taking a hit. Next Decade. QXO down 3%. That's getting no love right now. $14 a share. Okay. I think for the most part, that is our day. We didn't talk too much about the NVIDIA backing for the Ohio data center, $100 billion guaranteed. They also put in a $3 billion investment into SoftBank Energy. We ended up seeing Jensen come out and explain a little bit directly to the market now that he has an X account. He's talking about how he believes that OpenAI is going to be able to pay for this data center, but even if they can't, they'll be able to just offload a lot of that compute to many different buyers. So that's how some of that, they're reducing the risk on some of the financing for that. Also, the chips, people have to remember, NVIDIA doesn't have to pay the multiple that other customers have to pay. Other customers are paying 75+% margins, which means they're paying 4x what NVIDIA has to pay. For them to supply essentially $100 billion worth of chips, or, even potentially more than that, to them, it's maybe closer to about a $25 billion investment. Very different over a multi-year setup. You could be putting in, small single billions worth, even though whenever you're talking in the billions of dollars, this is like the amount that they're expected to beat Wall Street expectations by this single quarter, let alone how much they're actually going to do this quarter, which is somewhere around $94 billion. Pretty wild. And that is, by the way, completely separate and different than the $500 billion that they're also getting Wall Street with Apollo and BlackRock and Blackstone and KKR and all of those companies to also back a $500 billion financing for other clients, completely separately. And so this how do you say, these types of deals are definitely allowing them to stay ahead of the game and have companies working with them rather than looking towards custom silicon opportunities or working with AMD or some of these other businesses. Now, I don't think that means that AMD is going to see a lack of overall sales. They're going to do great, but it means that NVIDIA is not going to fall behind, right? Guaranteeing essentially $1 trillion worth of revenue in 2 separate deals that have happened over the last couple of months. Pretty wild. On top of that, for the AI stories, Higgsfield just raised an additional $400 million at a $5.4 billion valuation. This is a company that has done a lot of work with Nebius, and it's been a very, very early Nebius customer. Seeing that type of growth, definitely going to be good for the NeoCloud. B of A talked about how prices on B200s are staying quite flat. DRAM prices are raising, up 8% month over month, while what was it? Was it energy costs? Let me double check that again. Well, AI token prices are falling. That's what it was. AI token prices are falling, but the amount, the sort of Jevons paradox is stepping up, and we're still seeing a lot of use for the actual chip layer, which is where my money lies for the most part. Uber is partnering with Zipline to bring autonomous drone delivery to Uber Eats customers across the United States, with first deployments coming later this year. They also target about 1 million, targeting 1 million drone deliveries per day by the end of 2029. I wanted to say per day, but I was like, that sounds high. But no, that's what they're targeting. On top of that, there's been another couple of exciting things. Anthropic is projecting about $200 billion in revenue for 2028. These types of benchmarks on that revenue is how they're getting to their IPO price, roughly some people are saying as high as $2.5 trillion. This IPO is likely to be coming out in the next few months. So that could be the biggest and hottest IPO that we've seen ever in market history. On top of that, we had people like Gavin Baker and David Sachs come out on the All In podcast, talk about how they believe that exit ARR for 2027 could be as high as $400 billion. These are just estimates. This is back of the napkin math, just guys sort of shooting estimates between each other. But the fact that they, have very, very close ties with these companies, and these are still the numbers that they're willing to back their names around, pretty wild statement to say nonetheless. What else? Stripe is reportedly nearing a deal to acquire AI platform OpenRouter for more than $7 billion. Amazon just got a new bull case, seeing $500 price targets from Morgan Stanley. This was on the back of the $1 trillion AWS deal that they ended up putting up. Grok, the company that NVIDIA just licensed their deals from, has a $3.5 billion valuation. This is actually a down round from them from $4.9 billion, but raising another $350 million. And NVIDIA was one of those backers to get them there. Sorry, it wasn't 4.9, it was 6.9 billion last September. Wild. But obviously, NVIDIA took their, co-founders and a lot of their high up executives and licensed out a massive amount of their, overall hardware. So who knows? Maybe the down round is expected. But those are some of the stories that we ended up covering today for the most part. There's a couple others, but that's a little summary of the day. Thank you all so much for watching. If you guys are new here, hit the subscribe button. Got a pretty interesting interview tomorrow that'll be on the live stream about 2 p.m. Eastern Standard Time. So, that should be really fun. And then it'll be back to the sort of deep dives like what we did with Bending Spoons, and but a little bit more presentation-wise. I think I'm still going to build a Bending Spoons presentation to give a little bit more. I want to continue to learn about this business. Only just some of my first impressions of what I thought about the company. I think for me, as an investor, I want to find companies that can beat the S&P 500 consistently. I don't know if Bending Spoons is going to be an immediate multi-bagger, but do I believe that they could compound at a 20 to 30% rate consistently for the next 10 years? That's sort of the idea that I'm trying to get around. That's what I want to figure out. And if that's the case, I may be an investor in that company, but I promise you guys I've not made a decision on that. And when I do, I'll let you know. Thank you all so much for watching. Really do appreciate your time. Until next time, bye for now.